So I know since we're smart money traders, we have the strategy of BTMM, okay? And it mainly consists of looking at price action, looking at or trying to identify the next market trend or piggyback off a market level that's already played out, okay? Now, me personally, I trade the 3-day cycle. I mainly trade off of the 15-minute chart, but I want to be sure that I'm in an area of the chart that puts me in a better position not to get stop hunted out and will bring in huge amounts of profit for me. Okay, so I will gravitate to the daily count. Okay, which is Monday is day 1, Wednesday is day 3, and it automatically restarts itself to be day 1. Okay, and then Friday is going to be day 3. Now, the reason why I like this or I gravitate to this because it's easy for me. I can pretty much cherry pick my trades when it comes to the 15-minute chart. So this benefits me in a way where, okay, if I'm cherry picking, well then Wednesday comes, I know that Wednesday is usually day 3. And I say that, with, I don't like that. Let's head over to a little visual, okay? So, me personally, I'm a trader that loves the 3-day cycle. I follow the 3-week cycle and the 3-month cycle as well, but I'm very glued to my 15-minute chart looking for an opportunity based off the 3-cycle rule. Little did you know that there's 3 different things when it comes down to the 3-day cycle. Me, like I just said, I look for the 3-day count, okay? And then what I'll do is, I didn't know that, I was looking for the 3-day cycle with a failed breakout at last week's high or low. One of my video mentors were Stacy Burks trading. When I discovered him, I did not know that, I was looking at last week's high and low, and looking for a rejection off of that. I didn't know I was doing that. But, I'm not saying it's a bad or a good thing, but now that I know that, that I have muscle memory with that, I don't have to really add anything towards that. If you've been following my videos, you know what I'm, trying to get at. So, you can decide if you want to have a 3-day setup using signal days. Signal days is we're looking at price action at the end of the day to tell us what has happened. This, inside day is when price is inside a day. You see that all these words, right, are inside of this box. Well, normally, let me get my little drawer. Yeah, there we go. So normally, inside day, price just stayed within yesterday's high and yesterday's low. Okay. So when we have a first red day, is when price breaks out of yesterday's low, and they stay closed there. So that's our first red day. That's day 1. Okay, and it'll be the opposite for bullish. But I don't trade like that. I don't. I trade based off of the daily count, and I look to get my reversals based on the high and low of the current week failing to progress. Okay, so don't worry, this video is going to get better. Okay, so we look for these opportunities at last week's high, last week's low, so forth with the month and the day, the previous day's high and low. We want to see them do a breakout, pullback, right? Pullback, and we want to get our second leg. Hopefully our second leg can be this, but there's different variations on the theme where we're going to have a boom, retest, and they don't go any higher, they immediately just retest the high, and they go on with the trend. Okay, like I said, there's different variations on the theme, and that's that. Pause the video, take a screenshot. These slides are in the Drive Notes folder called Look in Notes, and then there's going to be another folder called 3-day cycle. All those slides are in there. Okay, so just right off the rip, if you don't know where to start with the cycle, or when you come in on your terminal for the day, or the new month, or the new day for the week, this is what we're looking for. Finding day 1 in a 3-day cycle. For this scenario, we had a failed breakout at last week's high or low, or last month's high and low, or the current day for the current week for this scenario at the previous extreme. Okay, so if the breakout occurs on that same day, high and low, and it's a failed breakout, then we have day 1, day 0. Now this kind of contradicts with the box trade method. Why? Because with the box trade method, we want to see price action respect last month's high or low, or last week's high or low. We want to see that, because that's telling us that market makers are strongly in control of the market, and and they're doing their thing. So for this scenario, or for the daily chart, it's not going to give us, I don't see any textbook setups. So if we go based off what we have now, okay, we look in our top row, I want to make sure that price is what? Consolidating and false move to last month's high or low. So this right here is going to take a long time for us to get to the extreme of this monthly box. But you see, this is why we implement more pairs to the equation, because not every pair really runs the same. So we see that this particular week, since we're in the second week of this month, okay, today is Thursday, August, we see that price has immediately, for this current week, has been bullish, and they want to retest. So with the box trade method, let me just reiterate, we wait for price to consolidate and make a false move, and then we want to make sure that we have a trap pattern on the weekly. So this right here, this column is just resistance. This column right here, this blue column, is just support. Okay, we normally will have a zone or a box drawn over here, but like I said, I had the indicator doing that for me. Okay, I have the indicator doing that for me. The EFC is based off of RSI, right? So when we have the stop hunt, divergence, the blue area or the blue candles is divergence, and then where's my sell is the red candles. This is telling me that all this price action I should be looking for is selling opportunities. So when price, or on the monthly chart in the first week, in the first week of the new month, you should expecting to sell this area. So let's head down to our 4-hour chart, and we're automatically telling ourselves that I have a good play on US 30. I have a good play on just US 30. Okay, even though I mainly trade the German 30, I automatically understood to sell that German 30 when they gave me the right criteria. Okay, so when we head over to the 4-hour charts, let me do that. We see that last week, or on that Monday last week, now let's just do this current week, okay? So we already know that we have a peak formation that's based on the daily time frame. We should be selling. the market immediately opened down here at last week's low, and then we had a buying climax. Right off the rip, you should be telling yourselves, I want to sell here. I'm only looking for sales. Yes, I know you can buy and sell at the right parameters in the market. What I noticed, throughout these couple of weeks, me having that mindset, oh yeah, I can buy and sell, I have been disregarding the 4-hour rule. The daily time frame rule. Only trade in the direction of the peak formation. Yes, there was a lot of money to be made right here, but on that US 30, we know that we should be selling. So wait for the trend. Wait for the market to retest resistant zones. I'm happy that I put this here, because I would have waited for price to come all the way up to last week's high, and I would be missing out on my opportunities to sell. So I love that I have a resistance area that has been retested 11 times. Okay? So it's showing me that price really doesn't like this area. Price doesn't like this lower low. This lower high. It doesn't like this lower high. And they finally stop putting it out. But like I said, on Mondays and Tuesdays, when we do get our when we do look for our weekly trap setups, Tuesday comes and they reject last week's high. Last week's low. I'm taking that trade, but I wasn't looking for buys. I think I did post an update. Yeah, take a buy position, but I know that I should be looking for overall sales. So this week, whatever, was mainly bullish, but they have to be bullish because it's the way of this, the nature of the market. But we know that they're gonna have to do some type of pullback and give us our entry criteria to get in on a longer play that's being played out on a daily time frame. So technically, I was supposed to just forget about trading German 30 this month. For this week, because I already made my profits for last week, and just focus on US 30, because the price action for US 30 has been positive, has been very great, versus with the German 30, the Francis 40. They're basically giving out bullish setups. But since we're trading the 3-day cycle, we see that on that Wednesday, so yesterday was Wednesday, we want to look for the 3-day cycle reversal. So if we already have an expectations that on a daily time frame we have a bearish trap formation, on that Wednesday we were rewarded to go short, get our 50 pips, and that's that. I kid you not, I'll only get 50 pips. So, and that's that. So our analysis or our bias came true for that, for that Wednesday. What about for our other pairs? Tuesday, Wednesday. What was the trap pattern for SPX on that daily time frame? We could just say it was bearish. So it kind of came true to be looking for reversal. So day 1, day 2, day 3, we're already coming down on a downtrend. So, it's whatever. This is why you'll probably want to incorporate the other terminology or the other strategy for tracking 3-day cycles. But this is just me. This is just me keeping things simple, okay? Because since price closed, did a false breakout reversal, right? I will automatically know that tomorrow, or this price action, I shouldn't be taken off guard of that, because price did not want to continue down, or price did not close, this indicates to me that this is a false price reversal. Then they're going to continue to go up. Okay? They're going to continue to go up. And the New York session is so funny, man, how these markets play out. So New York session gave out the New York reversal, which was part of the bigger trend of the higher time frame. Okay? Of the higher time frame. So just right off the bat, today's Thursday. Look at this. Francis 40 is up there. They automatically rejected this resistance. The UK 100. I have my stop loss there. Okay. I'm targeting this low down over here. Okay. The reason why I'm selling is because this peak formation over here, we have the monthly high. Okay. Yeah, we know that. We have a 90-day high. Since we're doing fractional disparity, we know that market makers control these pairs. And if you look at the other pairs, we're at all-time highs. We're at the yearly high. So if these pairs are showing me bearish setups, okay, then I will automatically note that the UK 100 will follow suit. Okay, will follow suit. All right. So when we drop down to our 15-minute time frame, just if I want to get entries, or I won't say entry because I enter on a 1-minute chart. So I'll go back to my UK 100, right? So for today, or I should say the German 30, because I took the German 30 trade today. So I was right here, German 30. I said, oh, this is because I was on a 1-minute time frame. So when I took this trade, I was strictly looking at the 1-minute charts, and I said that M on the 1-minute charts is painting a perfect type 2 W trap formation. And then when they went in for sale, I got my little I got like 30 or 40 pips, but I was aiming for longer, and they immediately stopped hunting me out. And I said, damn, what did I do wrong? I was trading the 1-minute chart wrong. I was looking at the 1-minute chart solely for my setups because I did not wait for my 15-minute chart to develop the setup or the M. I didn't trade my 15-minute chart. I didn't let my 15-minute chart to develop a valid setup for me. I let my 1-minute chart develop a valid set or a valid criteria for me, and that was very wrong for me to do, because the higher the time frame, or the higher the time frame you allow to set up, the more longer the trade you can be in for. Okay, so yes, I had a valid sell, and I should have taken my take profits right then and there. But if I will let my setup or my 15-minute chart play me my M formation, right? Play me this formation, I would have been good for the money. Okay, so that was my wrong. Luckily, I came across some indicators. Okay, same concept, just different color, but these candles strictly only paints on the high volume. It ignores low volume candles. Okay, so when prices does coming up here, I have to make it. I won't say have, but I have the right to make a decision to buy or follow that trend with that candle. And I would say, well, why would I buy when? Well, okay, yeah, I can say I can buy, and I understand this is a straightaway. But why would I buy here when I don't have a W setup around here? That doesn't make any sense. So today, I'm expecting what? I'm expecting rejection. I'm expecting trend to continue to go bearish. But if we look on our entry parameters, right, our entry time frame charts, I have no indicators on here. The only indicator I have on here is the market reversal. I know on my videos I've been putting ICT because that's why I was led to believe that this indicator is based on ICT, which is not. This market reversal indicator, is mainly following market structure. So when you do have a change of market structure, you know that you're supposed to wait for a higher low, or for our case, price has making higher highs and lower highs. We want to make sure that price breaks structure, price retested structure, and made a lower low, or a lower high. So we're hoping for price to continue to downtrend and make a lower high and then a lower low. Okay, so this is perfect for me, because if I'm on the 1 minute time frame, I'm looking for 1 minute structure to change, because 1 minute time frames can be very volatile. If I see something like this, I'm taking that. If I see something like this, I'm taking that W for that buy. I took a sell over here, okay, which was over here, and then market closed. No, market closed over here, and then market retested and said, "Oh, this is a change of structure." So that's cool. That's whatever. If I was trading a 1 minute time frame, it would have been a different story. I would have taken my take profits. That was that. But since I'm trading on a higher time frame, I know that on the UK 100, price has potential to come down over here. Price has potential to come all the way down here. Since we're trading fractional disparity, I know price will mimic these other pairs. I know price should follow suit and carry and pave the way for the rest of the pairs. Okay? So, like I said, since we're in the second week of this month, we should have a peak formation that's already in place for us. German 30, SPX, those are the pairs that's screaming out to me. Okay? So I will focus on, I guess so. But if the pairs, if a setup presents itself on the weekly time frame for next week, I will take that buy, but I will be taking sales. I'm looking for selling opportunities only, and I'm waiting for price to come at the weekly high and do what? A breakout, a false break reversal, basically. Price came back down to the low and did a breakout reversal, so that's a false break reversal. I'm waiting for price to do a weekly on a 4-hour chart. I'm waiting for that false break reversal, and that will reset my 3-day cycle. So when I come down to my 15-minute charts and I look at the UK 100, I said, well, initially when we first started this day, this was our daily high. Our weekly high, right? This is Monday, so our weekly high. This is day 2, day 3, day 2. We have our false break, break and reversal, false break reversal. So hopefully today or Friday will be day 1 of the bearish trend. And that's how you trade, baby. That's how you trade the strategy. Okay? Thank you. Have any questions, let me know. Once I'm funded, I'm going to invest in a little bit of software and do some good videos. I'm still have the trade company in Houston. I'm still doing that. I think probably like another week or so, I'll find that textbook setup like this, so I can just pass my challenge in one sitting. Okay. I'm not trying to be greedy or anything, but if I see this, I have a selling bias just by default. I'm taking that, and I love that I'm trading indices. I have the courage to trade indices, so the money's going to be there. They're going to run in my favor. Okay, look at this big money. Look at that W. Come on now. I'm definitely going to take the time to be patient and let my 15-minute charts develop. I'm not going to go on my 1-minute charts and bamboozle myself. Oh no. Because I'll make some good trades based off the 1-minute chart. But like I said, they don't last that long. So it is what it is. But thank you guys. Stay blessed.